Okay, so get this. We're diving deep into Piramal Pharma today. And
Yeah.
you really hooked me up with all this information.
Yeah.
Their Q3 and 9-month reports for fiscal year 2025,
Right.
which, by the way, ends December 31st, 2024,
Yeah.
just to keep things interesting, right? So we've got their press release, their stock exchange filings, even the earnings called transcript.
Oh, wow.
Talk about information overload, right?
Yeah, for sure. Because that's what we do, right?
Exactly. We're going to sift through all of this
Yeah.
and really see what's noteworthy.
Yeah, exactly.
What's important for someone who wants to understand, how this global player is actually doing and what it kind of signals for the industry.
Yeah, are they living up to the hype or?
Yeah,
and
but exactly. Are there some cracks in the facade?
Right. Well, their press release, it boasts a 14% revenue growth
Okay.
and a 20% EBITDA growth for the 9 months.
Sounds good.
Sounds like a victory lap, right?
On the surface, sure.
Yeah.
But
You got to flip to that consolidated net profit after tax, and suddenly things look a little different.
okay.
They're actually reporting a loss
Wow.
of 62 crores for the 9 months,
Okay.
which is a sharp turn from last year's profit.
Okay.
So that's the kind of detail that makes you sit up and pay attention.
Definitely. Yeah. Last year profit, this year loss.
Right.
What's going on?
Yeah.
Well, they're saying that, their fourth quarter is usually their strongest.
Okay.
And that they expect that trend to continue
Okay.
this year.
Right.
So basically saying, hey, trust us.
Right.
We're going to turn things around in the final stretch.
Yeah.
Do you buy it?
Well, it's a bold move, no doubt, but
Yeah.
let's not jump to conclusions just yet.
Okay.
To really understand this puzzle, I think we need to break down their performance segment by segment.
Yeah, let's do it.
And I think a good place to start is with their contract development and manufacturing organization,
Okay.
or CDMO, as it's commonly known.
Right.
Which is clearly their golden goose right now.
Yeah.
18% revenue growth over the 9 months. That's impressive.
No, this is interesting to me because they're not just like churning out generic drugs. They're really focused on
Exactly.
high margin on patent drug manufacturing.
Yeah.
And get this, they're branding their top scientists as a scientific collective.
Interesting.
It's like they're assembling an Avengers team
Yeah.
of pharmaceutical geniuses to lure in clients who are,
Right.
hungry for the latest and greatest therapists.
I like it.
Right.
And it seems to be working. But even with all this success, there is a note of caution in that earnings call transcript.
Okay.
They're talking about, clients taking their time to make decisions,
Oh, really?
and reliance on already commercialized molecules for growth
Okay.
rather than, newer, riskier developmental drugs.
Interesting.
It makes you wonder what's going on behind the scenes.
Yeah, absolutely. Yeah, it seems like there's some hesitation in that, biotech funding landscape.
For sure.
Even though things are looking better than last year, investors are still a bit hesitant to, throw money
Sure.
at those early stages time. Potentially game-changing,
Yeah.
but also potentially risky
Right.
drug development.
Yeah, and that hesitation trickles down to companies like Piramal.
Yeah.
Fewer of those big-ticket development contracts could mean a bumpier road to continued growth,
Yeah.
even for their star performer.
So even the good news comes with a little asterisk.
Exactly.
So let's turn our attention now to complex hospital generics, or CHG.
Okay.
After some initial hiccups, they bounced back with a respectable 14% revenue growth in Q3.
All right.
So what's the story there?
So this is where Piramal really flexes its muscles in the world of specialized,
Okay.
difficult to manufacture generic drugs used primarily in hospitals.
Oh, wow.
We're talking inhalation anesthetics,
Got it.
injectable therapies,
Oh, okay.
the kind of stuff that requires serious expertise.
Yeah.
And it looks like there's sevoflurane, which is an inhalation anesthetic,
Okay.
is a real winner,
Right.
especially in the U.S. market.
Okay.
They've even snagged some key contract renewals,
Yeah.
which is always a good sign.
They're not just playing in this market, they're dominating it.
Yeah, they are.
Over 40% market share in sevoflurane in the U.S.,
Wow.
and over 70% in intrathecal baclofen, another drug in this segment.
That's huge.
Talk about a power play.
Yeah.
And they're not stopping there. They're investing in expanding capacity at their Dahej and Digwal facilities in India,
Oh, wow.
with an eye on those rest of world markets.
Interesting.
Ambitious, but could it be a risky gamble?
That's the million-dollar question, right?
Right.
If those markets grow as projected,
Yeah.
it could be a brilliant strategic move.
Yeah.
But if those projections are off, It
Oh,
could be a costly overreach.
okay.
And that kind of brings us to their India Consumer Healthcare segment, or ICH.
This one feels a little different, right?
Yeah.
10% revenue growth for the 9 months is nothing to sneeze at, but they're clearly navigating some choppy waters
Yeah.
with the overall slowdown in consumer spending in India.
Absolutely.
Yeah.
This segment is all about those everyday over-the-counter
Yeah.
health and wellness products
Okay.
you find in your local pharmacy.
Yeah.
Cough syrups, digestive aids, skincare products.
Right.
It's a crowded market,
Yeah,
especially with a tightening economy.
for sure. But here's the thing.
Yeah.
They're power brands.
Okay.
You know those heavy hitters like Little's, Polycrawl, and CIR?
Right?
They're actually thriving.
Oh, wow.
19% growth.
That's huge.
They're even rolling out new products.
Interesting.
And a splashy new ad campaign for lactocalamine.
Oh, wow.
What's that secret sauce?
Well, they seem to have really cracked the code of e-commerce.
Ah,
Think about it. In a slowing economy,
right.
convenience is king.
Yeah.
And Piramal is riding that wave.
Yeah.
Online sales skyrocketing by over 40% year on year.
40%, that's huge.
It is.
Wow.
Yeah.
So e-commerce is now a hefty 20% of their ICH sales.
Okay.
That's a pretty savvy move,
It is.
capturing that growing online market share.
Absolutely. It's a classic example of adapting to changing consumer behavior.
Yeah.
They're not just sitting back and watching.
Right.
They're actively on over 20 e-commerce platforms,
Wow.
making sure their products are front and center for those digital shoppers.
Okay, let's shift gears a bit and
Yeah.
talk about something that's, increasingly important in today's world.
Yeah.
Sustainability.
Right.
Piramal seems to be, walking the walk, not just talking the talk.
Okay.
They even got the stamp of approval from the Science Based Targets Initiative, which, as you know,
Yeah.
is no small feat.
No, it's not. This isn't just some feel-good PR stunt.
Right.
It means they've committed to some seriously ambitious and measurable targets
Yeah.
for reducing their environmental impact,
Yeah.
backed by real science.
And they're putting their money where their mouth is. They've switched a coal-fired steam boiler at their Digwall facility
Okay.
to run on biomass briquettes,
Interesting.
a much cleaner, carbon-neutral fuel source.
I like it.
Yeah.
Though that move alone
Okay.
will slash their emissions by a staggering 24,000 tons of carbon dioxide equivalent annually.
Wow.
17% of their total footprint.
That's impressive.
It is.
It seems like they're taking this seriously.
Yeah.
And it's not just about doing the right thing.
Right.
It makes good business sense, too.
Exactly. Sustainability isn't just about ethics anymore.
Right.
It's about efficiency, cost savings,
Yeah.
building a brand that resonates with today's consumers.
Speaking of smart moves,
Yeah.
Natalie Leitch has rejoined Piramal Pharma's board of directors.
Interest.
Now, you might be thinking, so what?
Right.
But trust me, this is a big deal.
Okay, I'm listening.
So,
It's all about strategic positioning.
right.
Ms. Leitch is a powerhouse in the pharmaceuticals world.
Okay.
Over 20 years of experience,
Wow.
particularly in the U.S. generics market, which, as we know, is a key area for Piramal's growth.
Yeah.
She's held leadership roles at companies like Apotex Fresenius Kabi,
Yeah.
Teva Pharmaceuticals, even Allergan and Actavis.
So her expertise in, product strategy,
Yeah.
navigating those tricky U.S. regulations,
Right.
formulating winning products, it's like they've added a secret weapon to their arsenal.
It certainly signals a commitment to strengthening their U.S. presence
Yeah.
and leveraging top-tier talent to achieve their ambitious goals.
Speaking of ambitious goals, Piramal has set their sights on doubling revenue
Okay.
to a cool $2 billion by 2030.
Wow.
But they're not just aiming for top-line growth.
Right.
They're talking about hitting 25% EBITDA margins
Okay.
and achieving high teen return on capital employed, or ROCE.
All right.
Those are some bold targets.
It's a gutsy move, especially considering the current market landscape.
Yeah.
It begs the question, do the numbers actually support this kind of growth trajectory?
Okay, time to roll up our sleeves and get into the nitty-gritty of their financials.
Let's do it.
Let's start with the elephant in the room.
Okay.
Debt.
Debt can be a powerful tool for growth,
Right.
but it can also turn into a real burden if things go south. Right now, Piramal's net debt to EBITDA ratio is sitting at 2.8x.
2.8x.
Yeah.
That's not setting off any alarm bells just yet, but
Right.
it's definitely something to keep a close eye on.
Yeah, I agree.
Especially since they're talking about, major expansion plans,
Yeah.
which usually means big investments.
Right. They've mentioned a focus on deleveraging,
Okay.
which suggests they're aware of the potential risks.
Good.
But can they really pull off this massive expansion
Yeah.
and reduce debt at the same time?
That's the question.
It is a delicate balancing act.
Right. Where's the money going to come from?
Exactly.
They might have to get creative, maybe raise additional capital through debt or equity.
Right.
But that could dilute existing shareholders or, increase their financial risk.
For sure. It's a delicate balancing act, for sure.
Now let's shift our focus to their cash flow statement.
Okay.
This gives us a glimpse into how much cash their operations are actually generating.
Right.
And how they're spending it.
Exactly.
Okay, let's see what the numbers tell us.
Well, this is where things get interesting.
Oh.
Piramal's cash flow from operations has actually been negative for the 9 months.
Wait, negative?
Yeah.
You mean they're spending more cash than they're bringing in?
I do.
That's not a good sign, is it?
It's definitely a yellow flag.
Okay.
They're relying on other sources of cash, like borrowing or selling assets to keep the lights on.
Right.
That's not a sustainable strategy in the long run.
It makes you wonder if those ambitious growth plans might be built on shaky ground.
They've mentioned improving working capital management as a way to boost cash flow.
Okay.
Things like squeezing better payment terms from suppliers
Okay.
and getting customers to pay their invoices faster.
So they're looking for ways to tighten the belt and squeeze more cash out of their operations.
It's a necessary move, especially with those ambitious goals looming on the horizon.
Okay, so let's recap.
Mhm.
We've got a company with some real strengths,
They do.
particularly their booming CDMO business.
Yes.
But they're also facing some challenges like that negative cash flow from operations and the need to manage their debt carefully.
It's a classic growth versus profitability dilemma.
Yeah.
They're betting big on expansion, but it's going to require some fancy financial footwork to pull it off.
And we haven't even factored in those external forces buffeting the industry, like the unpredictable biotech funding scene and the potential impact of new regulations like the Biosecure Act.
Right. These external factors could make or break Piramal's grand plans.
Yeah.
The Biosecure Act, for instance, could shake things up by forcing companies to shift manufacturing back to the U.S.,
Okay.
potentially disrupting Piramal's global supply chain.
And let's not forget the fierce competition.
Oh, yeah.
The global pharmaceuticals arena is a jungle with giants and upstarts battling it out for market share.
Oh.
Piramal needs to stay ahead of the curve, constantly innovating and finding ways to stand out from the crowd.
Absolutely. Complacency is a recipe for disaster in this dynamic industry.
Yeah.
Piramal is making strategic moves, investing in capacity, showcasing their expertise.
Right.
But it remains to be seen if they can maintain that impressive growth trajectory and hit those ambitious financial targets.
So far, we've dug into their financials and operational performance.
We have.
And we've touched on those swirling external factors.
Right.
But there's one more piece of the puzzle we need to examine.
Okay.
The people at the helm and their vision for the future.
I like it.
This is where that earnings call transcript becomes a goldmine.
Right.
It's our chance to peek into their minds, understand their priorities, and see if their words match their actions.
For sure.
All right, let's put on our analyst hats and see what we can glean from this earnings call.
Good.
One thing that jumps out at me is just how much they're emphasizing innovation, especially in that CDMO segment.
Yeah. They're not just talking about being a contract manufacturer.
Right.
They want to be seen as a strategic partner, a source of cutting-edge scientific expertise.
Yeah. Remember that scientific collective we talked about?
Yeah.
It's more than just a marketing gimmick.
Right.
It's a way to attract clients who, want to be at the forefront of drug development.
Exactly.
They're clearly aiming high, but they're not naive about the challenges.
Yeah.
They've acknowledged that client decision-making, particularly for those riskier developmental projects, can be slow.
Yeah.
And that the biotech funding landscape is still a bit shaky.
For sure.
So it's a smart approach.
It is.
They're balancing ambition with a healthy dose of realism.
Absolutely.
And it's not just about, chasing the next blockbuster drug.
Right.
Their commitment to sustainability is woven throughout this transcript. They're talking about reducing emissions, investing in cleaner energy sources.
Right.
Like those biomass briquettes and aligning with those science-based targets.
It's refreshing to see a company in this industry putting such a strong emphasis on sustainability.
Yeah, it's not just a PR move. It's a core part of their business strategy.
And it makes sense.
Yeah.
Both ethically and financially.
Right.
Sustainability is becoming increasingly important to investors and consumers,
Yeah.
and it can lead to greater efficiency and cost savings down the line.
And now let's talk about the people leading the charge.
Okay.
Nandini Piramal, the chairperson, comes across as incredibly confident and articulate in this call.
Yeah, she's not just a figurehead.
Right.
She's a member of the Piramal family, a dynasty with deep roots in the pharmaceutical industry.
Yeah.
That brings a level of credibility and a long-term perspective that's hard to replicate.
Yeah, and Peter DeYoung, the CEO of Global Pharma, seems to have a really deep understanding of the CDMO market and the challenges ahead.
Yeah, he does.
He's talking about, procurement strategies, operational efficiency, diversifying their client base. He's not shying away from the tough questions.
I like it.
So they've assembled a seasoned leadership team.
They have.
With a blend of industry experience and financial savvy.
Yeah, that's crucial for navigating this complex and ever-evolving global market.
So after all this digging, what's the final verdict?
Okay.
Is Piramal Pharma a company worth watching, maybe even investing in?
Well, they've got a lot going for them.
Yeah.
A strong foothold in the booming CDMO market.
Uh-huh.
A commitment to innovation and sustainability.
Right.
And a capable leadership team.
Okay.
But those headwinds,
yeah,
the negative cash flow, the reliance on debt, and the uncertain external environment,
right,
those are real concerns.
It's like they're a high-growth startup that's still figuring out the path to sustainable profitability. There's enormous potential,
right,
but also a fair amount of risk.
The million-dollar question is, can they execute on their ambitious strategy?
Yeah.
Adapt to those inevitable market shifts.
Right.
And maintain that financial discipline only time will tell.
So for anyone looking at Piramal Pharma, it's crucial to weigh both the opportunities and the risks.
Yeah, I agree.
Their ambition is enticing.
It is.
But achieving those 2030 goals will require skillful navigation through a complex and ever-changing landscape.
It will.
And you know what I think is particularly fascinating is their bet on the CDMO segment.
Yeah.
And that global shift towards specialized, high-value drug development.
For sure.
If Piramal can ride that wave, manage their finances wisely, and stay ahead of the competition,
right,
they could be a real force to be reckoned with in the future of healthcare.
Yeah, I think so too.
That's something worth pondering, isn't it?
It is.